What's up everyone, welcome back to the channel. It's Emil. Today's video I'm going through a cyclical stock that's been absolutely hammered because of the coronavirus. So a lot of stocks have recovered since the big drop from the coronavirus, but this is one of the stocks that hasn't come back at all and is still down up to 70%. So there are a few industries that have been really heavily affected by the coronavirus that are seemingly going to continue to be heavily affected, such as the airline industry, the oil industry, the cruise industry, the travel industry. So this industry is somewhat similar to oil in the fact that there's absolutely zero demand for it's a commodity pretty much. It's a commodity at the moment, and there's pretty much no demand for it at the moment because of the coronavirus, because it's heavily used in manufacturing. And obviously manufacturing is taking a huge hit because of the coronavirus, because no one's really buying as much stuff, and the biggest importer of the commodity is China. Over 50% of it is shipped to China. So obviously China's on total lockdown, but they're starting to come out of it now. But still, we have a lot of supply, and that supply needs to be used up before the demand can come back. So the prices for the commodity are at an all-time, well, not an all-time low, but a serious low that they haven't seen in a long time. Okay, so I won't leave you waiting any longer. The commodity is methanol. I'm not sure if you've heard of it, but the company we're going to be looking at today is the largest producer of methanol in the world. The company is Methanex, ticker symbol MEOH, meow. So what the hell is methanol used in? Well, it's used in a crazy amount of things that you would have no idea about. So I have a list here. It's used in furniture, insulation, wood panels, electric outlets, irons, casing for TVs, mobile phone parts, buttons, shoe soles, pillows, solar panels, car levers, steering wheels, blah 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 blah. So it's basically it can be used to make plastics, and another use for it is it's a more clean burning fuel source as opposed to petrol or gasoline. So in China they mix it with their petrol to make their emissions, to reduce their emissions, and it actually helps your car go faster, which is cool. So methanol is a cyclical industry anyway, and it was coming to the low part in the cycle anyway. It had a peak. I'll put up a chart of the price over the last number of years for the stock, but as you can see, it's really cyclical, and if you time the bottom and you cash out at the top, you can make some crazy gains in a short amount of time, in a relatively short amount of time. So that's why I'm interested in the stock, because it was going into a low part of a cycle anyway, and the coronavirus just accelerated it and really dropped the price to new lows that we haven't seen in a long time. Do I think it's going to bounce back straight away? Absolutely not. I think it's going to take a few years for demand to come back anywhere near to what it was in the past. However, I think we have an opportunity here to start dollar cost averaging into the stock while it's low, while it's not paying any dividends, and then hopefully in a few years sell out on the rebound. So I'm not usually a kind of a short-term investor like this. I'd consider like a few years short-term. I'm a very, very long-term investor, but this is just an opportunity that I'm seeing, so I'm researching it. So for example, if you had bought the stock in the low point of 2009, held it for 5 years, you would have 10x your money if you sold out in 2014. But that's perfectly timing the bottom and perfectly timing the top. So that's unlikely that you'll be able to do that. But what I'm looking to do is take out a piece of it while it's at a low. If it just shoots back up, then that's fine. But if it keeps dropping lower, I'll pick up some more shares, but I'm not going to make this a huge portion of my portfolio. So let's run through more of the actual business rather than just the commodity. So we'll just run through what Methanex has done in regards to the COVID-19 situation. So they've been building a few new methanol plants. So basically they turn natural gas into methanol, but they've pretty much stopped the progress of those plants as much as they can, which they safely can. And they've also idled a couple of plants that are less productive or less cost efficient plants. So they're reducing production, and they're also saving about 500 million in capital expenditure that they would be spending on a new plant in the United States. To add to this, they've also cut their dividend by 90%. So A lot of people were in the stock because of the somewhat healthy dividend. It was about 2% before. At this price, it's 10%. However, a lot of people were in it for the dividend, and now that the dividend's been cut, they've really fleed, giving us more of an opportunity, because we're not in it for the dividend in the short term. We're in it for potentially a capital appreciation and some nice dividends along the way. So right now, this company is so cheap. Over the last 5 years, they've given back 2 billion to shareholders in the form of dividends and buybacks, and now you're getting the whole market cap of the company for just over 1 billion. And with a market cap of 1.1 billion, you find this crazy, but in EBITDA, they made 1.1 billion in 2018. So they have some really good years. So like their whole profits for the year was the same as the entire market cap is now, which would be a PE ratio of 1 if it was, making that much money now, which it definitely won't. But I'm just saying, like, you can see how much money they make in good years, and then in bad years they won't make very much at all. So Methanex has sites all around the world, and they have their own private fleet of vessels. So they have their own vessels, their own ships that carry the methanol around to the customers, and those ships are powered by methanol, their own methanol. So that's interesting. Methanol, if there's an oil spill or a methanol spill, it's non-toxic, unlike oil. It's not bad for it's not bad for the environment and stuff like that. Like, for example, petrol is. So, is it going to be used in the future as an alternative fuel source? Maybe a little bit. Maybe the way it kind of is now, it's kind of mixed in with petrol and gasoline at the moment in ships and in cars. However, I don't think it'll take over in cars because electrification is coming. However, it might be used in ships in the future. However, I'm more interested in its usefulness in all the other aspects, which I talked about at the beginning. I think we'll still need all those products in the future, and there's still projected growth in demand for the future. However, the growth in demand is slowing, so just to be aware of that. For the last 5 years, the demand for methanol was 6%, and every year, 6% increase every year, and the demand in the future, their predicted demand in the future before the coronavirus impact was an increase in 4% a year. So it's a pretty slow growing industry. However, we're getting the biggest company in the methanol industry. They're the biggest company by a factor of over 2. So the second biggest supplier produces less than half the amount of methanol than Methanex. So their return on invested capital was 11% in the last 5 years, which is a good number. They're currently selling for less than their book value. So their price to book ratio is 0.8. It always shows good value if a company is selling for less than its book value. So its book value is basically what all the assets that the company own are worth. And if the company is selling less than that, you're essentially getting all those assets and then the company for free. Like if the book value was 1, the price to book ratio was 1, then you'd be getting the company's name and the brand and whatever for free, and all the assets that it owns for the price that you're paying for it. So now we're getting it at a discount to the book value. However, does anyone really want to buy methanol production rigs right now? Probably not. But it's always good to see a value like that, a value play like that. So in the last recession, they actually continued raising their dividends. So the fact that they've cut it by 90% really shows how much the demand has been hit because of the coronavirus. So it's really slammed on their demand. The price for methanol has dropped to prices that they would never have predicted before, well below their minimum requirements from previous years. So it usually hovers anywhere between 300 to 400 per metric ton, and now it's about 250. Okay, so let's have a quick look at their balance sheet. So the balance sheet is okay. They recently raised 400 million in cash to get them through this time, so that helps, but it adds to their debt. So they have cash right now on Yahoo Finance. It says 400 million in cash, but when listening to the earnings call, they said they raised another 400 million from their credit lines. So I'll assume they have 800 million on their balance sheet right now. So that gives them a long-term debt of 1.7 billion. So it's quite a lot of debt for such a small. Well, it earns about 1 billion in revenue in a normal situation. So their cash minus their long-term debt is 1.3 billion. So that's the real long-term debt that they have to pay off over the next number of years, taking into effect the new debt that they took out. And they have total assets of 5.7 billion and total liabilities of 3.5 billion. Their forward PE ratio is 21, with an average PE ratio of over the last 10 years of 12. So their price to earnings ratio has increased because their earnings are dropping so much. Even though the prices come down, the earnings has really come down. Price to book, we mentioned 0.8, really low, and price to sales of 0.4, which is really low, which is a good thing. A price to sales and a price to book ratio below 1 really indicates a value company. However, the price to earnings ratio is quite high, but in a cyclical industry, that's usually a good thing. That means that we're at the low point of the cycle, which usually indicates that it might be a good time to buy. So in a cyclical industry, sometimes a high price to earnings ratio is a better factor than a low price to earnings ratio. So as you can see, their revenue cycles between 1 and 4.5 billion roughly. So with a price to sales ratio of 0.3 when they're currently earning only 1 billion in revenue, you can really see how much this could skyrocket once we start getting back to those $5 billion in revenue times. That will probably come in around 6 to 7 years if we're looking from past data. So lastly, I just want to look at this chart. The chart for Methanex, and you can really see the cyclical nature of the stock price, which goes along with the revenue. So I've kind of drawn this line, and historically, whenever you've bought under this line, you've eventually been rewarded handsomely, and buying above this line generally is a bad idea. So as you can see, we've really dropped through this trend line, which Methanex, all the way since the start of the millennium, have slowly followed this trend line. So it's increasing really slowly over the long term, being very volatile in the meantime. So we're looking for this swing. We're looking for this swing trade in this kind of, rather than looking for the long term capital appreciation, because it's only really rising at a few percentage points over the long term. However, the stock price really fluctuates in between those times. So as I already mentioned, what I'm doing with Methanex, I picked off some shares in Methanex, and I'll continue to probably follow the story and see what's happening over the next coming years. So it's a bit of a risky play at the moment, and pretty much always. But yeah, demand for methanol is going to be terrible for the next year at least, and probably for the next couple of years. So I don't think you need to rush into buying this stock. It could stay low, it could go even lower, it could stay low for a number of years, and I think that's a good time to potentially accumulate the stock and hopefully have the discipline to sell it once it starts rising again, which I believe it will, because it's used in so many products and the demand for those products will come back in time, even though there's an oversupply of methanol right now. I hope you enjoyed this video. Probably a company you've never heard of, probably a company that hasn't really been talked on YouTube before. If you enjoyed the video, please drop me a thumbs up so other people can see it. Subscribe for more content like this. I have loads of interesting videos coming up, so make sure to stick around for them. Thank you so much for watching. I really appreciate it. Hope you enjoyed, hope you learned something, and I'll catch you all in the next one. Cheers.